audience. Perfect. All right. Thank you for those answers. So this session, we're gonna divide the session into three sections. So we're gonna have first talk about the terms. I will be covering tax terms like K definitions on the first part. The second part, I will go through overview of the tax form itself, the 1040, the major form when we talk about a tax return. So when we are on the second session, we're going to talk about a little more basics. We're going to touch on adjustments, deductions, itemized versus standard deduction. And the third section is going to be some additional resources, some more practical resources. And then we'll have a Q&A session at the end. But please feel free to ask your questions, especially between these sessions, so that I move on to the next section, knowing that, okay, there aren't any questions, or if there are any questions, we're comfortably answering those and moving on to the next section. So the first session, the tax terms and the key definitions. When we talk about tax terms, one of the first items we should make a note that is that, why are we even talking about, why are we even concerned about taxes? Why are taxes important? Let's just touch base on that before we move on to the specifics. Taxes are important because it's a contribution to the government's, state or federal, their funds. It helps governments run smooth operations. For example, educational institutions, health institutions, security institutions, they all benefit from these tax funds. So our contributions go into different funding, and then these are resources that we all benefit as a society. Most people pay taxes. Some people don't pay taxes. There are some people, what you pay really depends on your individual circumstances. I think there's always an effort to make tax rules as equitable as possible. There are always complex, ever evolving tax rules at business levels or individual levels. For example, a high wealth individual's tax situation might be different than some other person that has a different earnings, and just very, very different levels. But one thing for sure is that if you are required to file, and if you don't file, then there are really hefty penalties. So when we are going through today's materials, one of the first things I wanted to point out that let's learn if we have to file or not, and know that, okay, if we don't file, there are severe penalties. That's the one basic concept that I wanted to make sure we point out. So there are numerous different types of taxes. Today, we're going to only focus on income taxes. Other taxes you might heard of are payroll taxes, sales taxes. There are different rules for those, but again, we're going to today only focus on individual income taxes. as I mentioned that before, there is always efforts to improve the system of taxation, but the amount of taxes you pay does vary. The terms tax is what we have to pay out of our earnings that are actually subject to taxation. So not everything is taxable. We have to first figure out what is called taxable income. What is my taxable income? Is everything I earn taxable? No. There are some tax exempt interest income, for example, not taxable. And also there are deductions from your gross overall income. So one terminology I would like us to keep in mind moving forward is taxable income. So tax, I think all of us has a really good idea of what that might be. We know that to arrive at that figure, there are so many terms and so many forms, but taxable income is where we'll have to figure out and then make some calculations arriving at our tax obligation. What is a tax return? A tax return is where we figure this out, actually. We fill it out based on the documents we have in hand. And one of the most famous forms we use for a tax return package is a Form 1040. It's mainly the final produce of the tax return. And this is for federal purposes. So when we file our returns, there is a federal level and there is also a state level. Each state has their own taxation. At the federal level, Form 1040 is the typical basic form we'll have to file as an individual. For California, it's called California CA 540. So California 540 pulls the numbers from the basic federal 1040. In addition to these two forms, there are schedules that we attach to the main forms. So we have our 1040, we have our California 540, but then there are other schedules. For example, Schedule D. Schedule D is a form where you report your investment gains and losses. And those gains follow to your 1040. For example, if it's a gain, then you pay taxes on that gain. If you buy and sell cryptocurrency, this term becomes relevant. How does it become relevant? If you sell a crypto, you have a sale price, and then you know how much you paid for that. That's your cost. So sale price minus cost is your gain, or you might have a loss if you're selling it for less than what you bought it for. One thing you have to pay attention with the investment gain and losses and reporting the taxation of them is that sometimes it's not always easy to keep track of them. They might have the tracking, some of the software system or some of the banking internet sites that you use to buy and sell those, they're going to give you the transaction history, but sometimes they're all lumped in together. So one currency might not, it will be up to you to keep track of those instead of in one big lot. Just keeping track of those. This is my cost, this is my sale price, and the difference is my gain or loss. The IRS is really paying attention to the Schedule D reporting these days. That's why it becomes relevant where in case of an audit or in case of a taxing authority questions, you'll have your documentation. You will be able to produce the back support for why are you reporting these losses on your 1040? Where is this gain coming from? Any questions so far? No?
Hey, Daria,
Yes.
I had a question. I put it in the chat. I don't know if you saw it, but I
Sorry,
was
I
just
didn't see
wondering,
it.
it's all good. If all individuals have to file a 1040, or is there some individuals that don't necessarily have to file it, like excluding dependents?
Very good question. So we have a slide that we will answer that question. We're going to cover that. Very good question.
Okay, for sure, thanks.
So, but your specific question is, you mentioned excluding dependents. So you'll see that some of the dependents also do have to file, interestingly. So we'll touch on that too. But yeah, that's a very good question. We have another question here. How come some states don't have income taxes like Washington, for example? They have sales taxes. That's how they get around it. Their revenues. So, and in Washington lately, they're changing the legislation. They started bringing some taxation on actually about just what we talked about, your gains on your investments, which is getting really negative feedback from, as you can imagine, for Washington residents, because I have clients that move to Washington specifically to get out of the California taxation. California is one of the highest states, up to 12.5% individual tax rate, one of the highest states as far as income tax. But so when my clients move to Washington thinking that it's going to be only sales tax on the items they purchase, and so this new taxation on the capital gains, they're not very happy about it. But states are always looking for ways to generate revenues. That's the reason. Any other questions? Yeah, of course. You're welcome. Okay. I don't see any other questions. Let's. Right. Okay. So let's talk a little more about the terms. What are some other terms? Dependent. Dependent for taxes is generally a qualifying child, and that's another term, qualifying, or a relative. It's a person who relies on someone else for financial support. Tax law is designed in such a way that if I'm financially supporting a person, this is for parents or relatives perspective. If I'm financially supporting a person, I should have a tax break. I have expenses that I pay. Why can I have a tax break? So parents do get a tax break on their own 1040 for a dependent, right? So they get a credit. That credit reduces their taxes that they owe. So that's the next terminology, tax credit. For dependents, there are credits such as child tax credit. It's up to $2,000. If you owe $2,000 in taxes, you might be able to get a $2,000 credit, then therefore you have a zero tax liability. There's another credit called dependent credit. That's up to $500. So, and then also they can claim a dependent as their medical expenses, right? So medical expenses of a child, for example, on their tax return, they get a tax break. But in return, as a dependent, if we determine that you're required to file, you don't get as many breaks, because whoever is supporting you, they do get those tax credits and deductions. We'll talk about that a little bit more. So we have a dependent as a terminology, and we have tax credit versus tax deduction. I think this is one of the areas that confuses many, where credit reduces your tax liability directly. If I calculate that at the end of my 1040 form 1040, I owe $1,000. If I have a credit, that means direct dollar to dollar, $1,000, $1,000 credit, zero taxes. Deduction is a little different. Deduction is where you can take your gross earnings and say, hey, I have a $20,000 deduction. The government is giving me this automatically. I'm entitled to that. So it's going to bring my income down. If I have a $20,000 income, $20,000 deduction, then I'm good. I have a zero taxable income. But if I have $50,000 income, $20,000 deduction, right? I have $30,000 net taxable income, then I have to sit down and calculate how much tax I owe on that amount. So that's the difference between credit and the deduction. On the deduction discussion, we have two types of deductions: standard deduction and itemized deduction. Standard deduction is a flat amount that the tax system just lets you deduct from your income. And we have a schedule. We're going to look at a 1040 in a second. But itemized deduction is another set of deduction. You can either use itemized or deduct standard. You can't use both. So you have to see which one is better for you. Itemized deductions, it's better for people who own homes and pay mortgages, and if they have property taxes, nature of that. If your taxes are pretty simple, you might have just one W-2. In most cases, you're going to take your standard deduction. What is a withholding? When you get your paycheck from your job, your employer has to keep some of your earnings. They turn it around and give that to the government. It's almost paying your taxes as you go. The government would like that. That's how the law is written, instead of waiting at the end of the year and calculating your taxes. Your employer is going to withhold those taxes, and then at the end of the year, when you fill out your 1040, you're going to say, hey, my employer already took $500. Here's my W-2. Here's the withholding. So then you're going to show that. That way you don't have to pay that much of your taxes if you owe any. On the other side, you might get that as a refund in most cases. And capital gains tax, we touched on that, tax on investment. If you have a profit when investment is sold, like crypto, generally the profit is sale price minus the cost. Have any questions on this slide? All right, so who must file income taxes? If you meet all of these that I outlined here, if you're under 65, if your earnings are under standard deduction, and you don't have special circumstances. For example, you're not running a small side business, and because that's going to complicate things. So if you're under 65, you don't have a Schedule C or any other special circumstances. If you just have some earnings, for example, W-2, and if your earnings are under standard deduction, you do not have to file. So what is that deduction amount? What is the set amount? Here's the amounts. They're single, 12,550, married filing separately, married filing jointly. These are the amounts. So the idea here is, let's say you have, you're single, your earnings are $12,000, but you already have a deduction against that. It's given, the IRS is giving you 12,550. So if you even file that return, the IRS knows that it's going to be negative, the zero. So you have enough deduction to cover it. So why even bother filing? The reason I put here running small business is if you have, if you're even making even $2,000 from a side gig, you will have to pay some self-employment taxes there. That changes things. So that's another whole scenario. On a dependent case, let's just go back to the dependent, who's a dependent. I know we talked about it, but there is a dependency test on that. So first of all, we should know if someone is claiming us as a dependent, right? Are my parents or someone else, are they claiming me as a dependent? If yes or no, that will change how you're going to file and how you're going to answer those questions on your 1040. So a parent can claim you as a dependent until age 19 or until age 24 on a full-time student basis. Financial support requirement has to be there, and there is a test. I didn't want to take too much time on that right now, but there's an IRS publication on publication 501, dependence and standard deduction. Most of the cases, if you're getting over 50% of your financial support from someone else, and you're meeting these age requirements, you know, as a child, your parents will be able to claim you, and this is for a child dependent. And there are also rules for adult dependents that are not child. They're again, it's more about financing 50% or more. So your parents, if you determine that your parents can claim you as a dependent, when do you file a return? When do you file that? So remember we talked about the dependent standard deduction will be different. For dependents, standard deduction is the greater of 1,100 or the sum of 350 plus the amount of their earned income. So how does that work? If you have, if you earned $2,000 earned income, So that's 2350, right? So 2350 is the magical number it's going to be. If your earnings are more than 2350, then you're going to have to file a return. So this becomes relevant when you have unearned income. Let me explain that a little bit better. The unearned income is the income you get from dividends and interest. So takeaway is, if you have interest and dividend income, you should evaluate this. How much is my unearned income? It's going to be, most of the times, if you're getting somehow, maybe you have a lot of interest earning funds from various things, from a trust or from an investment account, and you have a 1099, you receive the 1099, it says you earned $1,100 interest income, dividend income, or capital gains. That is going to tip off the threshold. You're going to have to file. It's not going to matter that you're a dependent. So watch out for that, the $1,100. Also, watch out if you have W-2 earnings more than 12,550. So that's going to also tip that off. So the amounts of your earnings, if it's more than 12,550, just evaluate it. Those are the key concepts. Any questions on this slide? Nope. Okay. So having said all of the above, there may be situations where you determine, well, I don't have to file, these don't apply to me, but perhaps you do want to file anyways because your employer withholds those taxes and you're going to get that as a refund. So that's one scenario that you might want to file to get your money back as a refund. What are the filing deadlines? For the calendar year, we're filing from January through December, your earnings, January through December. For that period, for 2021, the tax deadline is April 15, 2022. There is an extension available that's going to be until October 15, but this doesn't mean that you can't wait to pay if you owe money. So if you owe money, the government expects that you do pay that. Otherwise, they're going to start charging interest, and then you will receive letters from the IRS asking for the interest. One thing to note here, when there's financial aid application, the IRS tries to match the tax returns filed to any application forms. So just something to watch, that everything is consistent. So now that we have some knowledge of tax terms, let's talk about this. Let's think that I want to prepare my taxes. What should I do first? First, you should gather the documents you will be using, your W-2s, your 1099s, maybe you received the 1098T for tuition that you paid, gathering those. And then here's a 1040. This is the first page. Here's the second page. As you can see, the first part is pretty straightforward. It's going to ask for your name, information, social. The standard deduction part, let's see if I can point this. Sorry, I'm trying to see if I can point. Okay. Standard deduction. Maybe the highlighter will work better. That's one terminology we talked about. Dependent, filing status, single, married, filing jointly, separately, head of household. Those are different filing status. And here's that standard deduction again. So if someone could claim you as a dependent, you'll need to mark here, yes. Sometimes this become problem where if a parent claims you as a dependent and then you file and then you don't mark this, then you get your standard deduction and they get also a standard deduction. Then the IRS has matching issue because they are using your social security. So if you mark this, then your standard deduction goes away here. And then you have less to deduct against your income. But the wages we talked about goes there. Some dividends, other income, capital gain, attaching Schedule D, we talked about that. Here's standard deduction or itemized deduction. In your case, most of the time, it's going to be standard deduction. So starting entering all of your income here, your standard deduction here, and taxable income. We talked about taxable income. It's right here. On the second page, you calculate your tax. Most software programs will do that automatically. Nowadays, we don't do these forms manually, but there's a tax brackets published by the IRS that those are how it's determined. For example, if you're making between this and this amount, this is the tax percentage that you pay, and they're all automated in software systems. Here are the credits. Once you determine the tax, you can get credits. If your employee withheld taxes from your paycheck, those are entered here. Estimated tax payments, other credits, some educational credits, child tax credits, all of that. After that, here is your net tax amount you owe. This is the amount you owe. And that's it. You sign and file it. Any questions on the 1040? Okay. Our last session, this section 3. How do we prepare it? We talked about it a little bit. Where can it be filed? Any additional information? So there are so many online websites. One thing to be make sure is they're legit, right? There are some very well-known online tax filing companies such as H&R Block, Jackson Hewitt. They offer some free services as well, especially for students. Maybe not for the state tax return. They may not, but I know that for the IRS for 1040, they have free tax filing services. But VITA is a great option, volunteer income tax assistance. And also the IRS has a website on the this web address. They have tons of information there as well. So those are some suggestions. Here's more website addresses for that. And you can always mail the tax return, but we really don't do that anymore as much. E-filing is always faster. If you have a refund, you get your refund within 2 weeks nowadays, directly to your bank account as a direct deposit. So one thing I wanted to add is that in addition to deductions, there are also credits available for students. So if you end up determining you don't have to file, but you need to submit to your financial aid office, for example, a verification that they're calling non-filing verification. The IRS has this website where you can log in and get that required document for your needs. And that's all. Thank you for listening, and let's see if you have any questions and thoughts.
Hey, could I ask a quick question, Daria?
Yes.
So earlier you said that there was like a certain number where it's like if you make below this amount, then you probably won't have to submit a tax return.
Yes.
So I guess then you'd recommend, like, because depending on someone's situation, that once they start working full time or making more than that, then that's when they'd start looking into it. So a lot of, college students, pretty much once they exit college, would likely have to do that.
Yes, you're right. That's when it becomes, and especially what I see is a lot of college students when start exiting, the income level goes up, financial support might decrease from the parents. So that really tips them into a situation where they do have to start filing their own returns.
Okay, for sure. And then what about, are there any nuances with, like, for example, if someone's trying to go to graduate school? Like,
sorry?
and there's like graduate school and they're being like, normally a lot of them get a fellowship and are being, they might not be making a lot of money necessarily, but like, I guess I don't know the details of it too much, but they're being provided money to help pay for the school and working as a TA.
Oh, you're asking about the scholarship income, if they're
Yeah,
getting scholarship.
yeah, sure.
I know that some scholarships are not taxable. I can't remember, I can't recall the specifics on the taxation of those. I can definitely send out information on that. I haven't seen that many situations. which
Mhm.
makes me think that they're most likely not taxable to scholarships. But yeah, let me send information on that.
Okay, for sure. Thank you.
Yeah, of course. Anything else? Also, I don't know if anyone has any questions about the accounting, CPA career, things like that. What I can tell is that it is a rewarding career, ever changing. It's not number crunching. It's very rewarding overall. I
For
think
sure.
the part is the CPA exam part is, a little demanding, obviously investing time, but after that it just gets better, much better.
Yeah. Yeah. I'm not a business student myself, but I heard the CPA exam is nothing but fun.
Yeah. Yeah. Any other questions?
Doesn't seem like there's too many other questions. I guess
Okay.
I can stop the recording here.